Hello, traders. Want to do a sound check. Let me know when you guys coming in. Start messaging me when you're online. Hello, traders. Message me if you can, if you're able to see the presentation and you are online right now. Hello, traders. If you guys are online, message me so I can start the session. I just wanted to hear from you if you're online. Are you guys on the YouTube or you're joining me from the Facebook? Message me. Hi, Emmanuel. I can see your message. You're online on the YouTube. Very nice. How's your weekend going? I just want to give a couple of more minutes before we start our session. So, Emmanuel, how long you have been trading right now? Great. So, yeah, 1 year is a good time period. Yeah, this is, yeah, Emmanuel, I can hear you. I've also burned many of my accounts. Yeah, best way is to approach is to take it slowly and take it as a business. Don't take it as making, being getting rich overnight. It's a tough job, but if we take it as a business and step by step guide is always gonna be uh, easier than and it is without taking it. Hi, Pedro. That's good. So you just 2 weeks now. Very nice. So you on the initial stages. Very nice. All right. I would appreciate if you guys give me thumbs up and we can just begin in the couple of more minutes. I just wanted you to give a thumbs up so then people can know we have started and they can also see using YouTube algorithm. And we will just gonna start in a couple of more minutes. So Pedro, are you which platform do you use? Wow, nice. Oh, WSTD. Oh, very nice. I wish I would have won, but I blew my account in on the third day. Nice. Hopefully this time you won't blow up. Yeah, we'll take it easy. I will nice. Nice. Okay. Hi, Odit. So, Odit, what which platform do you use and how long you've been trading? I will just take a couple of more minutes and then we're gonna start. Maybe 2 more minutes and then we can start. So, have I pronouncing your name right? Your nickname, Odit? Hi, Fletcher. So, Fletcher, are you with the TEFS as well, and how long you've been trading? If you can confirm your just how I use very nice Comex. Yeah, I use TEFS myself. Yeah, I have a pro account. I would appreciate if you give a thumbs up just to uh, you know attract more viewers. If you I really appreciate if you give a thumbs up, and we will just begin in a couple of more seconds, and then we're gonna begin. Very nice, Fletcher. Intro account with the 3 months on real account, very nice. Survival with the first account on 3 months is really nice. All right, so 13,600 right now. So you're close to what? You close to burning or because oh 600. So still have $200 room. Yeah, hopefully you won't blow up. Yeah, yeah. This is a feeling for everyone. Everyone want to grow faster. Everyone as a new beginner, we do that. All right, let's start with that. All right, we have people here and we can start with that. And give me the feedback. Let's make it more interactive. And let me know if you wanted to know more. And only difference between you guys and me is just maybe one step ahead of you, but I'm still on the same boat, still learning phase, right? So I'm going to share my experience, and we will share each other experiences, and we'll make sure that we will succeed in this, hard journey. So let's start with this. So what my personally I think that trading, we should take trading uh, as not any as just take it as a business. And and in order to succeed in any business, as you know, right, even if I open a small lemon stall, or if I open a soup, a convenience store, anything, any business will only we can get succeed in the business uh, if we have a plan. And similarly, if we consider a day trading is also as a business, then I feel and I believe that we have a better chances to get succeed. And what happen when you do an any open? So you need a business before you start any business. You need a business vision. That's why you wanted to do that business, right? Why you are interested in that particular business. It's okay to say, you are doing this business because you wanted to make money. But I think that this reason is not enough to say that because I wanted to make money, therefore I'm doing this business. You need to know, we call this term as a SWOT analysis, that what is your strength, what is your weaknesses, what are the opportunities you have, and what are the threats you have. So SWOT analysis you have to do about yourself. We do any job, any business, we should know that where our strengths are. And if we know that where is our strengths, then we are better able to focus on there, and then those who are the weaknesses we have, we try to overcome it. So essentially what I believe, that once you have the plan in place, that yes, you want to do a day trading as a business, and any other business, day trading, you're doing your what you're trying to achieve is that you wanted to sell, buy at the low price, sell higher, or sell at the higher price and buy at the low. So you're dealing with the stock, you're finding a customer, or you're finding a right play where you can exercise your business judgment and you generate the profit out of buying at the low price, selling at the high. And if you consider the business in these two parameters, that buying, you are selling your stock, you're looking for a customer who you can sell that. And if you with this psychology, it will help you to understand that market is not against you. Market is just like any other market, either a supermarket, fish market, farm market, and this is a stock market, where a lot of customer comes in, a lot of buyers comes in, lot of sellers comes in, and everyone wants to make a profit. And is only depends on your skills, that would you have enough skills to identify the inventory which you can buy at the lower price and sell at the higher price, or the inventory you can sell at the higher price and later you can buy at the lower price. So it's all about your skills and your strength, that whether you have that capability to do that over and over and over again. So let's move to the once you have that overall big picture, I believe that there are four important components of your trading journey which you need to master. And once you bring all together, then it's come to your own personality, your psychology, which help you to give you a mental edge, which you can exercise over and over again, without any emotions, but rather with the rules, and it help you to generate income stream. And what are these? So first is the strategy and the technical analysis. We all know, like any other business, we need a product. And what is our product? Our product is our strategy. And what is our strategy? It may be breakup strategy, or maybe breakdown strategy, or maybe a gap and go strategy, or maybe a support and resistance strategy. All these strategies, these are our products. This is we have to understand that these are products. And now you need to, based on the price action, the technical analysis, you need to understand that whether these products will be helpful at the situation, where you wanna sell or buy, or you think that you do not have any product for that particular price action or for that particular market. And if you do not have, it's always easier to stay out of from the game because you do not have a product. And if you try to sell the wrong product, you might have a complaint from the customer, and you might get a fine from the regulator, right? Try to understand from that perspective that, you know from the business, just I'm just trying to translate that trading business terminology in the business sense, so then you can relate that the trading is not different than any other business. And and what happened if we try to exercise the wrong product in the stock market? Definitely you're going to stop out, right? And and then the next thing is the funding and capital. And funding and capital is a very important aspect of your business, in any other business, just like a trading business. So you have to be very protective about your capital, about your funding. But when we start our initial journey, our focus is more on generating the income. But we forget that, we will only able to generate a money based on our own capital, and capital is a limited we have. And if we lose our capital, we won't be able to succeed in our day trading business. The next is a very important, which is the risk management, money management, and the trade management. Today we're going to go into detail about the trade management, how I uh, uh, manage my trade management thing. But I just want to walk you through about the whole diagram, so then maybe in the future we can try to break it down one by one, each of the component later. Everyone understand the risk management. You need to have a right entry, right stop, and once you have a stop, then you have to stop out. And that includes the money management in the sense that how much you take a risk per trade. There are multiple factors to it we're going to discuss, because risk management, money management, and trade management, and all three are, I think, that is all three the same face of the same coin. And you need to understand all three together in order to have a better risk management and the trade management. And then technology and execution platform. If you do not have a right technology, do not have a right platform who does not allow you to execute in the right time with the speedy execution, you won't be able to succeed in your day trading business. And once you combine all together, then it's become your personality, then how you execute. For instance, if you are uh, you have a less patient, you are fast thinker, you are very off the cuff thinker, you're very smart in thinking, you're very quick in thinking, you make decisions so fast. So this is your personality. So don't change your personality to trade the stock, but rather you trade the stock which suits your personality. So since you are off the cuff thinker, you're a fast thinker, you're thinking so fast, so parallel lateral thinking for you, maybe good to trade a volatile stocks. Then we'll discuss, does it comes into your funding criteria or risk management. We are not, we just discussing from one personality perspective. But some people are not that fast thinker, they are the slow thinker. They need time to analyze the information and to react to that information. Then maybe the morning sessions and the volatile stocks are not a good items to sell and deal with them. Why? Because they need a quick decision making. And since your personality, your psychology need more time, you take time to analyze the information, maybe this doesn't suit you. It doesn't mean that you cannot do a day trading. It just means that you cannot you cannot deal in that particular type of stock. So what I'm trying to say that don't change your personality. uh, and if you're going to go on the random stocks, someday you were dealing with the volatile stocks, someday you're dealing with the low cap stock, sometime you're going and trading in the large cap stock, you won't be able to generate the consistent results. And the reason why you're not able to generate the consistent result, because that every product, every the large cap, small cap, medium cap, volatile stocks, all have a different personality. Since they have a different personality, and you have your own personality and your analysis, your analyzing criteria and the method, and if it doesn't suits you, you will not be able to produce result, because it create an inconsistency, and it gonna create mental barriers the way you're going to evaluate the information, and you won't be able to evaluate the information, and you might, there might be a stop loss, and you know that you need to respect the stop loss, but you might not be able to accept the stop loss. The reason just being is that the information is too fast for you uh, to make the decision. And I'm telling you, and then uh, I had a situation last week. You can go back and look at the recap, and I explained that I was dealing with the two stocks, and one was spready and other was volatile, and I was dealing with the two product at the same time, and both stocks went against me at the same minute. And if I was just dealing with the one stock, I might have to stop out based on that. But since these two stocks were moved against me at the same moment, I was just indecision. I was just paralyzed. I cannot think clearly that what should I do, and I was thinking too much in my mind that it was too late to press the stop loss trigger, and I had to take a hit of more than the expected loss. And the only reason is that because maybe my mind was not trained to accept that there could be a situation where two stocks can move at the same time, and how would I react to that. So before we jump to next point, I wanted to ask you that do you have any questions up to this point, and we can certainly take it, and then we can go to the next point then. All right, so now, you know when you look at the trade management, yeah, I will discuss what is my risk management. You know, if you ask me this question in December, I would have tell you that my risk per unit was $250. Then I increased to 350, now 450, then 550. And given I had a bit of success in the last month and a half, I have just increased when there is a A plus setup for me, and I will tell you that how you can identify your A plus setup. I usually go for 800 to $1,000 loss, but when I see that it's not an A setup, I usually keep my stop closest to $500. So it varies, but I will explain to you the rules you need to follow. But initially, when you're beginning your journey, still I am also not. I wouldn't say that I'm too far ahead, but I'm just saying that if you do not see the consistency, more often, then maybe limit the discretionary part, that how much, just limit yourself with depending on your accounts, and I will explain to you how you can do that. So let's do the next slide. So these are the common questions usually comes in when we talk about the trade management. What is the best position size? When to add to the original position? How much to add to the position? And before I jump in and I give you some of my perspective, and I share my how I think that it should be, and how I manage. Maybe I will ask you guys, what are your perspective here? If you can just write some points on the comment section, that what do you think that what would be the ideal position size? What does depend on? If I ask you the question that how would you uh, select your size, what would you say? And then you can write, if I ask you that how when you would you add to the original position right now, what would be your criteria, and then I will tell you what is my what I think that I use my criteria, and maybe you can consider that as part of your trading too. So $100 per trade. And how did you come up with this $100 per trade criteria? Hi Vishnu. So you're saying, so you try to take a trade which has a minimum of the 10-cent risk, and you try to take a 400 shares, so you take a $40 risk. Okay. So see, what I think that there are multiple things you need to consider, and it's not a straight solution or one pointer solution here to it. But let's go one by one. See, as I mentioned, the capital and the funding is a key for us to succeed, to be to float into the day trading business and stay in the business for longer and be successful. And let's take an example. I will take an example. I created multiple scenarios, and I will take an example that the student account scenario or the buying power. So, for instance, you have a buying power of $80,000, and I'm just trying to differentiate between the buying power and the capital allowed to lose. And you are saying that you have a capital which you can allow to lose is the $4,000. So you have a 80,000 buying power, but you have 4,000 to lose. But if you have a normal broker account, not the TEFS, so you will have to have your own capital, and on that you will get the buying power. So let's assume that you have invested the $4,000, and got the insane amount of buying power, and you have a $80,000 buying power. And I'm trying to give you some formulas that how you should think in the percentage and in terms of the rules for you to succeed. Normally, if you are just less than 2 months in the day trading, or less than a month in the day trading, I think what ideal is that you should not take a risk of less than you should be taking a risk of less than 1% of your capital. So your capital is not your buying power. Your capital is that the amount you are allowed to lose. So I put some percentages here. So 1% of the $4,000 capital you're allowed to lose is becomes a $40. But if you have over 2 months, let me just write it down here. Over 2 months, or depending on your situation, you can say that 2% of your capital is okay to lose on one trade. And if you put the 2% there, it's become an $80. So now we have two things. We have now understand that we have a buying power of $80,000. We have capital allowed to lose is 4,000, and we do not want to risk in any trade more than $80. And I think that is what I'm trying to explain to you, that just differentiate that. And once you have these numbers in place, then you will know uh, when to add, when not to add, and how much to add, and how much not to add, right? So now rule number one you need to understand, and we'll take a scenario that the maximum capital, you should have this in place, that maximum capital. And you can go back to one of my video where I explain that, where you can in the TEF evolution platform or the COMEX platform, you can add those numbers and it will limit your trade per capital, per trade, not be going beyond 30% of your buying power. So you fix into your platform that you do not need to decide manually, that anytime any trade you take, your capital should not be invested, your buying power should not be consumed more than 30% of your buying power. So for instance, if your buying power is 80,000 dollar, you putting a 30% here. So your 30% of the 80,000 becomes the $24,000. So now we have another number came in 20 with the based on the 2%, we can only allow to take risk of $80. And with the 30% max rule, we are not allowed to trade. Per trade, we cannot invest more than $24,000 of our capital into a one trade. And it will help you to understand, because what happened, and this has happened very frequently with me when I was trading. I have a tendency to go in a stock which block my capital more than 50, 60, 70%. And then if I find another setup, I'm unable to take it because of the capital constraint. And if that particular trade which I've taken over 70% of my capital and is not going into right direction, it's going sideways for now, uh, you will get impatient, because you are thinking you're getting FOMO now, because looking at the other trades are going into your direction, and you're thinking that you can make money from that trade. The trade you got in is not going anywhere. You are afraid that what if I take the position out and then it moved, right? Then you have a FOMO, and then you will make all sort of a mistakes, you know, and it will collapse your psychology, and you're gonna start making so many mistakes that you're gonna turn out to be your day into be a very red day. And just because that in the morning session you went into a one transaction and you have blocked all of your capital into one trade. And tell me if you have not experienced a situation. Come on, give me some feedback on the comment section. Have you experienced this situation? Yes, yes, Vishnu. Yeah, and I know I've been through with the situation too. So my hi, Yohan. No problem. We are discussing right now about the trade management. We have just started now, so you will catch up, and I will share the recording so you can look at the recording later. Uh, so yeah, and I realized that this will gonna limit you. So rule number one, you should make it, and you put into your platform that you would never gonna go into a one trade more than 30% of your capital. Full stop, right? And as you go along in your trading journey, and you're able to have more success, then you can tweak it based on your needs, right? For now, leave it as simple as it is, so you do not need to make more decisions. So now look at the first scenario. So I made the first scenario. Let me just keep it here. Okay, first scenario, for instance, stock is a $50 stock. So stock price is $50, and based on, we're not discussing any pattern, but as per the stock price and the pattern, you identify that there's a 30 cent of stop loss, right? And based on that, your 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 initial size should be 480 shares. Oh, sorry, 266 shares, based on the 2% risk on it. You have a 266, so if you round down or round up, it's gonna become 267 shares. Now, now the question comes in, which we come together here. Whether I add to it, right? What should be my initial entry? Should I go with my complete full size or should I go with the small size? And this question you need to answer yourself. Okay. And I have made some criteria there here, and I will explain to you one by one these criterias. But on your first entry, you need to ask a basic question to yourself. How good are you in identifying the right entry? So for instance, when I was started and I realized that I'm good in picking the trade direction, but I was not good in picking the right entry for me. And what does it mean that when I entered in on the price where if for instance if I'm going long on the $50 and it usually moved 30-40 cents after I moved in. And then when I'm close to my stop out, and the moment I stop out, then it moved back to the direction. So then I realized based on my analysis of my trade journaling that I'm good in picking the direction, but I'm not good in taking the right entry. So what you can do is then if you think that you also have a similar problem, that you are unable to pick up the right entry for most of your transactions, then you can lower your size. So for instance, based on the 30-cent risk, your ideal size should be 267. Maybe you can go only 200 shares, and then you can add another 67 shares or 100 shares once the stock is started moving in your direction. And this is you have to decide for yourself that whether you are in this problem or you're not in the problem, and can only able to identify when you go back and look at your trades. The second thing, which is we're going to scenario, then second, I'm going to give you criteria, is when you entered into a trade, you need to ask the question to yourself whether the trade you are going to doing, is this your playbook trade? Is this pattern you remember? No. Is this trade you in the past you are being profitable? Is the trade which you can call that this is your A setup, which you have a probability of over 70-80% of success? Can you tell by looking at this pattern? I can When I look my trade, I can tell for some patterns, but for some patterns I cannot tell that whether it is I can see that stock is strong in the morning, pre-market is strong, is gapping up, right? Is is also in the morning 15 minutes uptrend, is over the VWAP, but it has a right pattern for me to enter. I'm entering because of all the good factors, but am I entering as a right pattern? And if the answer is no for me, that if this is not a setup which has a right pattern for me to enter, then I would not take additional size over and above of my 2% risk. I will keep my initial size limited to my stop loss criteria, which is 30 cents 267. And as we go along with the different scenarios, I'm going to help you to understand how you can uh, add more than your original size, or or your initial size at the time of entry, how you can add to your winning stock, and how you can take the profit. But before we go into the different scenarios, first you need to understand that, or maybe you put some comments on the comment section and let me know that would you understand and you are on the position to explain to yourself that yes, you know your setup quality when before you enter into a trade. Are you at that level, or you are learning? Do you know about your A setup stocks or place or the patterns? Come on, share some comments and let me know. And then if you need more guidance, how you can identify, I can certainly help you in that as well. So give me your feedback on the comment section. Yeah, you're right. It will take it. It's not gonna be overnight. It has to be, day by day, day by day. You will put effort. You go back to your trades every day and look at it, and you will understand. And those who are new, just like Fletcher or Pedro, you guys are newly starting. You're not at this level. What I would ask you that limit your trading on a real account. Uh, uh, with one or two patterns which you are able to understand and execute well, right? For instance, you say that you wanted to go, you know gap and go. Gap and go is a pattern which you can easily manage the risk, right? Or maybe you wanna say like Michael, right? You say you want a longer term consolidation before you enter into trade. It's depend on your personality, but what I'm suggesting here, that these senior traders on the Tradenet chat room, they have the edge. They are doing over and over again for a long time. What you need to see, you need to study each and every trader's style and see that whether your personality coincide with which trader, whether you are aggressive, right? Whether you need a fast return like Mayor, or you are with the patience and you want like a Michael, or you love to play, you do not psychologically you are okay to have a three loser but one winner which cover your three loser and give you an over and above return, and ultimately you're profitable. And if you're kind of that person, then you follow Yogi, because Yogi might have a lower success rate, but his probability of getting the profit of the winning trade is very high. You look at his past results, he might have a two losers, but losers are very small, and the winner is going to be very, very, very large. So you need to study. Don't study them as they are trader, they're giving you trigger, and you're taking their trades. No, what you need to learn from them is that you what's your whether your style matches with their style, right? And whether your tolerance risk tolerance matches with their tolerance, whether your patient, your emotional temperament matches with them, and all together it will help you to get an edge, and then you try to play over and over those edge, right? Yeah. So Johan, try to stay. I remember, I'm telling you, my trading has completely changed where I am right now. It's just because then initially I was just wanted to trade everything. And I realized that, I'm not here to trade, I'm here to make money, right? And if you want to trade, take a demo account and just, keep trading. Just put the demo account, just trade, 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 right? No problem in the trading. But we are not here of trading. We are here to make money. This is our business. And we only going to buy and sell we gonna when we're gonna get the right customer and the right strategy, and someone is a willing customer who wanted to buy, where he willing to sell us at the low price and we are able to sell them at the high price, or someone we can sell at the high price, so then we can buy back at the low price. So we are looking for those strategies, and we do not need to overtrade to judge, okay, where is it going to be a top or where is going to be a low. you know you just stick with your one or two trades, three trades, limit yourself with the right pattern and the setup, and you can learn it. If one day what you do, you just stay in the TradeNet chat room with the intention of not taking any trade in the real account, but take all the trades on your demo account and listen each and every conversation what they have, either Amir or Michael, what they are having. When someone, when from the trader room someone say, oh, this is the trigger, they analyze it and they reject the idea, you know and you listen to their thought process, and then you will see that the person who has suggested the idea, you know even though he has asked the feedback, but he will not take that feedback. He's still going to trade the same stock, and after that he's going to complain in the same chat room that, oh, I lost that much money. And the reason because you do not have an edge, you do not have the probability to work on that particular edge. So you need to be cognizant about that. You will only able to generate your profit if you have an edge which have a success in the past, and you will only able to earn money if other people also thinks in the same way. This is self fulfilling proficiency. So if you are not able to uh, think through that if this something is a creative idea is only you have to make money, then you won't be able to make money in the market, because market is a collection of people. If many people think in the same way, then you have a high probability that you're going to win. But if your thinking process is different from the majority of the participants of the bank, participant of the stock market, then you might not able to generate the profit, because you are in isolation. So number one thing, you need to look at your past journal and you need to identify your setup. And setup, you need to rate them based on your past experience, the probability of success. And I will maybe create a video on that, and how you journal your trades. If you're interested, send me an email or message me, and then I can create a video on how to trade your journals to get an edge, to find an edge. And then next step is that once you know that at the entry you might not have edge. For instance, you entered into the trade, but setup was not A quality, so you went with your original size, right? And after that, the entry, the stock directly moving into your direction you're expecting, and there was no consolidation, there was nothing. So then you will not add into the you know and the trade. And your partial rule, I usually take the one is to one. I think have a more probability of success, so I take a one partial, and that's it. So two factors what I'm teaching you at this point is that you need to understand, you need to ask the question, first question, your setup quality when you enter, and second, after you enter, whether it's immediately move into the direction or it has any consolidation after that. So let's look at the next scenario now. So next scenario, uh, above factors are the same factors, and I'm not changing any other factor which are on top. Uh, but now look at the stock price. So now stock price is $150, and your stop loss still is 30 cents. So based on everything, your maximum share size based on 30% of your capital rule is that 160 shares. You cannot exceed your share size of more than 160 shares. But based on the stop loss, you can go over 266 shares, right? But what you gonna do now? Now again, as I mentioned, for now, initially you can limit with your 160. But then you can also go with your size based on your stop loss, just on the hope, on the for the focus is that it's a discretionary. You need to go, and once you go into that route, then you need to make sure that a couple of questions you can ask yourself. A, whether are you expecting any other trade in the same time. Are you expecting any other trade? In what time is it? Is it morning time or is it afternoon time? Excuse me. Because in afternoon time, usually you do not, have that many trades. Let's just give me a 1 second. I'll just drink a water and we'll come back. Yeah, sorry guys. Yeah, so you need to ask this question that are you expecting any more trades? If you're not expecting many more trades, then maybe you can break this rule. But my advice is that initially when you're taking it, make sure that you limit yourself with 160 shares based on your 30% capital rule. And all other factors will be remain the same, so I'm not going to touch it at this point. We go to the next scenario to discuss other scenarios as well. So any questions for the scenario number two? If not, we can move to the scenario number three. So Yuan asking that, do I trade only one setup or so see, initially I've started with only one or two setup because I realized that, I was not having that much success. And now I play a number of setups, but I only consider only few, two or three setup which are my A setup. And at that time, there I can, I put more shares on it, more money on it. And you can see from the recap, and I will going to walk you through as well. We do not have much more time, but I'm going to walk you through some of that, and you can go back and look at my recaps as well for that. So let's go to the next scenario. So next scenario is an important one. So next scenario is scenario number three. Let me change here. This is scenario number three. Now you have a stock price of $60 and you have same the stop loss of a 30 cents. Now your maximum share size is 400 shares based on your capital 30% rule. Based on the 2% rule, again we have a 267 shares. Now, now when you look at the setup, for instance, your setup is A setup, and A setup means that is an opening range for gap and go, right? And this is my A setup. So first candle for the long, is a long setup. For instance, stock is gapped up 10%. First candle, 1 minute candle. Let me draw it here for you guys to understand. So let's look at it. So for instance, the gapped up. So this is gapped up. For instance, 30%. 30% is too much. 10%, right? So first candle is a red candle, and second candle uh, s- started from here, right? Going red, going red, and then it shoot the break. So this is my A setup, and I will go long on this, and on it's gonna be further A. If for instance this is a VWAP, This is a VWAP line, green line. Maybe it's coming like this. So, and if I will take my first position here, long, second position, I will add on the breakup. And if it continue, if it go up, third candle, very nice. I will take off here and then partial. If you have seen me my V recap, this is my A setup. I love that setup. When VWAP is here, first candle is red, and second candle break the VWAP, break the first candle and go up. And this is my A setup. So I will I'm not telling you how to trade at this point, but my focus is that okay, were you able to identify your uh, uh, yeah, let's look at it now. So now, so I identified based on that this is my A setup. So now if this is an A setup, what I can do, I can even add 30% more into my normal size. So for instance, my normal position is 2%, which is 267. But since this is my A setup, I know in the past I have a probability of having the success of more than 80% on this setup. What I'm doing, I'm gonna increase my size, as I explained to you that what I'm gonna do, I'm gonna go bigger. And why I'm saying I'm gonna go bigger? Because I know that based on my past record, this is wonderful opportunity for me to make money, and we are all here to make money, right? So I'm gonna, because this is my setup quality at entry is 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 high, I'm gonna go with the 30%, right? So you want the risk reward ratio, as I mentioned. So what we are saying that you do not look at it from that perspective. You say that based on your capital, you're only allowed to lose 2% per trade per capital, on your trade. Now, in this trade, based on that, you've identified that 30 cent is your loss. So based on the 30 cent of your loss, 2% rule says that you're only allowed to trade 267. So that's, I'm trying to give you a new perspective. So do not think risk reward perspective as a strategy. Think from the stock perspective as your stop of that stock, of your particular entry. So if you enter now, what would be your stop loss? Your stop loss would be 30 cents. If that's your stop loss, then based on the 2% rule of your capital, you're only allowed to take shares of 267. But since that is the next factor I'm giving to you, that when you're gonna change, or when you're gonna add to your position, or where you're gonna go bigger, the criteria one which I use for myself is the whether my setup quality is A or not at the entry. If I see it at the entry, and let's give you one more example. Let me bring the paint brush again. So for instance, uh, let's take a same example, but let me draw you again. So this is the first red candle, right? And I'm saying that this is the green candle now, right? But the VWAP, because I usually like to play the VWAP. For instance, VWAP is somewhere here. VWAP is here, not here, right? In this case, VWAP is here. In this case, VWAP is here. Would I go? Would I go with the high, with the two ad, as I mentioned? First ad, I'm gonna go here. Second, no, I'm gonna only take the trade at this level. I'm not gonna add two times. I'm only going to add here. My first position will start from here, and I'm not gonna go with the higher size. I'm just gonna go with my regular size. Why? Because easily I can lose this much. This much. Maybe we can say technically my stop loss is this, This is 30 cents, for instance, but is also possible that I can have a slippage up to that, and price can go break with the very with the very volatility with the volatility. So therefore, I would not go with the higher size for myself. Yeah, yeah. Usually I'll take the low of the day, but I will also consider the technical indicators, because for many traders, low of the day in the first minute is not that important, because it's only a first minute. Market yet has to establish their trends, their indicators, their low and high. So first minute is highly volatile, and if you know, skipping 30 20 cents is not a big deal for any share. So therefore you need to consider both of them. Anyway, we're not looking at the setup at this point, but just my point to you, to explain to you that you need to consider that whether your setup is A or not. So now we have decided that this time I had a setup at the entry. So what I'm gonna go with the increase of my 30% of my normal size, which is 2%. Instead of 2%, I'm gonna take more risk now. What I'm risking now, so if I take 346 shares, and if my 30 cent is a risk, now this time I'm going to risk, instead of $80, I'm risking $104. I'm almost risking one half of my risk unit more. So in this case, I'm risking almost $104, which is almost 3% of my account size. Now I'm not going to listen again. The next criteria is still the same. After the entry, you took it, stock went into your direction, and you want to take the profit at the 1:1. So now scenario number one is very important. So now scenario number four, you you went in, all other criteria is same. Stock price is $60, 30 cent of your stop loss. Maximum share size based on the 30% rule is 400. 267 came in. You at the entry, you have identified that this stock is really your A setup quality. You added 30%, right? So now your share size become a 347. Now second rule, what I'm trying to teach you it about the consolidation. So now look at again let's look at it here. So let me draw something here. Okay, so now what happened, we'll take the same example. So this is the first minute candle, as we discussed, right? And this is the second minute candle, right? Then it at the third minute it flagged here. Do you guys see this pattern? And now you're coming very close to your, this time you came very close to your entry, but that's fine. You're now went a little bit down. Now next minute what happened, which is that it exactly, now this time it's going up. So what you can do, this is the bull flag. So you went long expecting in a continuation, but didn't continue. It came down 3 minutes. Now this time what you need to do, if you're smart enough, what you're gonna do, you're gonna add here at this level. Why? Because you think that it's gonna consolidate, and there is a chances that you're gonna be get a better reward this time. So you're gonna add here, and that's the question that's the next point I'm teaching you, that any consolidation after the entry. So the second parameter you have to reflect every time, that whether do you see any consolidation after the entry. So there is two criteria I'm teaching you. First, that whether you're taking the setup at the time of entry, is this your A setup? Then you have a chance to increase your 30%. Then you will ask the question that whether there is any consolidation after your entry. Then you can go and add it. I usually add 20% at the time. And now it's gonna become what? It's become, if you add all three together, 267 plus 30% and plus 20%, it's automatically give you a 400 shares, which is your maximum size of your capital, right? And do you see that now? So how this rules play, we are not talking, we have not yet discussing now the profit target, that where you should take, we will maybe some other time going to discuss, because it's already 1 hour now. uh, but I just wanted to teach you these 2 points. These are a very crucial point: the setup quality. Let me just green it here. Setup quality and any consolidation after the entry. And this is the way I use it to increase my size. And you know scenario number 5 can be the similar scenario, but in this case, I'm just saying that what if the stock price is not $60 but $100? And if this is the case, right, then you have to make your call that whether you expect any other trade, because in this case, if you're going to go like this, you may consume more than 30% of your max capital. But if you're not repeating this scenario many times, it's going to be occasionally it happens, then it means that you're making purposeful conscious decision of going over and above or breaking your 30% rule for the reason, right? And therefore you need to be very conscious when you break this. But I think this may be the time, perfect time to break this law. And in this case, for instance, uh, well, you need to be very conscious here, because you have added the size. What if it touched the this level, high of the day, and rejected? If it rejects it, then you do not need to think twice. You just need to quickly reduce your size, because you never know, the rejection may lead the stock, you know, very quickly and very strongly on the bottom, on the next candle. So you need to know the repercussions as well, the impact as well. Since you're an oversized now, it can harm you as well. So you need to be have your hotkey setups clearly, and you're ready, like you're looking like an hawk looking this candle. And if it doesn't break what you're expecting, it's okay to reduce your size than to take a more risk. That's I usually do this way. So, this is what I was trying to do for this workshop, to help you some of the factors which I consider, uh, when to add, how much to add. And I had other things to discuss as well, but since given the time, uh, we do not have much time left. So let's just look at it in one example. Um, and I'm going to teach you. Let's look at it. Let's see add after add consolidation example. So let's look at this example, that how I added based on my previous. This is add zeros. So let me just pause this. I think this one I didn't add it. So why? I think is an issue. Okay, so I think this is the example. Let's look at this one. Okay, so let's look at the example. See, this is CPSH, and you can study my commentary as well. It is on February 4th, 2021. And so look at this. It was gapped up. It was gapped up 30%. Not sorry, 28%. Under the VWAP, this red line is coming as under the VWAP. And if you look at the 5-minute chart, it tried to went up high of the day and strongly rejected, and it came down, and I created this support here. So this was the support before, now become the resistance. I entered, I wanted to enter over the VWAP at this level, but it spiked down so quickly that I couldn't get a chance to enter. So what I did, I let this consolidated, and I was thinking that once it's gonna give the green candle, and after the green candle, if gonna red candle break this consolidation, if you see here, I'm gonna enter. So I entered here, but then what happened? It spiked up down, spiked up all the way back up, and tested the the support again. I was almost close to stop out, but moment it came down back again, and you see, it went up, it came back down again. I added into my position. And why I added my position? Because at the entry, I was small size because the setup was is not my A setup. But after I entered, this consolidation helped me to add my position. So I added here. Then again, you see 1, 2, 3, 4, 5. 5 minutes of consolidation around the same price level. It broke again. I added. I took first partial here. If you see here, the moment I was now, because I'm now three size in, first size, second size, third size, so I don't want to take a risk, and it's already 11:30, so I don't want to take a too much risk. I took first partial here, and now I'm expecting a continuation. I don't want any more consolidation because is enough consolidation happened already. The moment it went back up, I didn't think twice. I immediately took all my position here. So luckily, what I added, I came back here and I didn't miss any of my profit, and I took all my position out here. And then the I remaining, I kept it on my entry here at the just slightly above the break even. But it spiked me in, spiked me out, and then I don't know what happened after that. But I put my stop loss close to my break even. What I'm teaching you here, that the consolidation rule, the second entry, what I'm teaching you, that after question number one, whether the setup was A, yes or no. Then after you enter, whether it consolidated and give you a chance to add. And when you add, then this is the time you make money. And then I think I made a good money. CPSC, I had a good profit. Almost I made the $1,500. I was not expecting that much profit in it, but I just made a profit because of the price action after I entered into the trade. So, you can go back and look at my recap. I try to explain those areas, where I added, or what I usually do. So hopefully, you like this presentation. Uh, and if you do not have any more questions, we gonna end that, and we can just give 5 more minutes. If you have any question, feel free to ask, and I will try to answer that. Yeah, yeah, Odin. I upload the complete presentation. So any more question, Fletcher, Pedro, Vishnu, Yuan? I will try, Emmanuel. My idea is that uh, to share what I've learned. I wish I would have some more guidance when I started. So I will try to do my best. Yeah, we really appreciate, like the channel, share with your friends. Maybe we can get a more viewership through all of you. All right. So feel free to send me message if you wanted to hear anything more, any other topic that interests you. You can also join my Facebook page, right, where I'm more active, or you can leave the comments on the YouTube, and I will try to do something next week. I might be busy, so maybe week after, but I will keep making the recaps. You can go back, look at the recaps now, and look at it. See, I also learn similar way when I look at the mayor's recap. I used to take notes. I try to learn where he consolidate, where he add, where he doesn't add, where he reduce the size, where he doesn't reduce the size. So only way in this profession you can learn is to spend your time wisely, spend more time learning, spend more time analyzing from the videos. You will find a lot of gurus who's gonna take a lot of money from you. Uh, if they can make enough money through the stock market, then why they need to sell uh, the courses? So just there are a lot of free stuff available. Especially the mayor is really, I like him. This little nice guy. A lot of things are available on his channel. YouTube is very free. You feel free to do that. Check out his channel, look at him, look at how he did the trades, and it's gonna be good. Look at my recap. All right, guys, I'm ending my stream, and then feel free to share, like my channel, subscribe to my channel, and share your comments. Thank you. Bye bye. Nice weekend. See you tomorrow on the chat.